Hello everyone, welcome to your next class. So in this class we need your ultimate attention because these are the whatever we are going to study, these will be the pillars of your trading journey, of your of your way to become a perfect analyst of a chart. So the first thing that we are going to study here today, as you can see from the slides, it is support, resistance and trend line. Okay, so again I am repeating, if we are able to fully understand, if we are able to fully get a hang of what these three are, support, resistance and trend line, almost 60 to 70% of our understanding of a chart, of our analyzing of a chart, of our journey to becoming a trader is done. So just be mindful, stop what you are doing. Like if you are working, just pause the video, don't watch it later, just have a clear mind and then start watching this video. So let's start. What is actually support, resistance and trend line? Okay, and this class is also important because we are going to use live examples, so just be mindful, pause wherever required, take screenshots, learn properly. So the first thing that we are going to do is we are going to study support. Now what does support actually mean? What does support actually mean? For example, if I am walking here, if I am walking through this road, this is a road, if I am walking, and how am I able to walk straight? Because my leg is taking support from the road, correct? Because my leg is taking support from the road. Rather be, if I am trying to get up, I need to take a support of my leg and then get up. No. So literally, that is literally what support is. Support is a zone where market takes support. Literal. That is a literal understanding of it. Support is a zone where market takes support. Means it cannot go beyond that point any further. So from the previous line which I said, it cannot go beyond that point any further below. It cannot go beyond that point any further below. So what does that, like, does that ring a bell? So if I am using the word below, then it definitely should be when the market is coming down, correct? Support is something, support is a point, a price where the market has some problem or has some what shall I say, has some force that it cannot go below. So if I am walking, my leg is taking support from the ground, correct? So similarly, if we see at this point, if we see here, market is unable to go below this point. This point is some sort of a support. Like market is coming back here and again going up, coming here and again going up, coming here and again going up. So this will be known as support. Now what is resistance? If we come to resistance, for example, if I am jumping, I am walking like this and here is the roof of the room. If I am jumping, how far can I jump? I can jump till the roof, no? Whatever be the force I am applying, I can jump till the roof, no? I cannot break the roof and fly out. That is not possible. So what is stopping me from flying out in the sky? The roof. Roof is resisting me to fly out from the sky. Similarly, when market is going up, at this point, we can consider this as the roof of the room and this is me. I am jumping. So at this point, this is the roof, this is how far I can go. Then if I hit that place, again I have to come down, correct? So that is the resistance point, or that is known as resistance. So two things we understood. Support is where when the market is going down and it's like staying at a point and then again coming back up, the point from which it turns, the point from which it gets some upward push, that is known as support. and the point from which when market is going up and the point from which market is giving a downward push or a resistance, that is known as resistance. Got it? Now trend line will come to that later. Let's go to the live market and see how we can actually find out a support and resistance zone. Let's take you to the live market. Before that, let me first explain you what is trend line, then it will be better. So trend line can be like two types. One can be like upward trend line like this. Three types, sorry. One can be upward trend line like this. Details we are going to come at later. One can be downward trend line like this. Another can be, these are also known as trend line, horizontal lines where the market is moving in a range. This is a trend line, this is also a trend line, horizontal trend line. Okay, so that the basic concept of trend line is understood now. Then we can go and okay, before that we also need to understand, to have a proper trend line, there should be at least two touches. Okay, just keep in mind, we'll get to that later. There should be at least two touches to form a proper trend line. If we get two touches, automatically we will get like three or more touches. Now what is that? It's becoming a little complex. I'll explain you what actually is that. Now that we have understood that we need to see two touches, so now coming to here, if we see, let's explain with the pen first. Can we see something like this? This range, market is really unable to break this range, correct? This range, market is really unable to break this range. Am I correct? Yes, market is really unable to break this range for a few period. This is not current data. Like we can see that market was unable to break this range. Now coming to this part, we can see, what did I just say? We told that we need at least two touches. At least two touches. Now if we draw a line here, we can use alt H as well. This is trading view, we need alt H on trading view as well. If we draw a line here, like our goal is to touch this point, and this point. If we draw a line there, what we can see is automatically we are getting touch here, third touch here, fourth touch here, and fifth touch. So our goal was to just conclude, just to draw a line using two touches. So when we did that, what we saw that automatically we are getting around 4 to 5 touches. So that actually proves that the trend line we are drawing is actually very technically at a right place. Like if you are getting more than 3 touches, trend line is actually a very good trend line and technically at a right place. Now how exactly can we get a support zone? Similarly, when we are drawing a trend line here below, our goal is to make 2 touches, right? We made 2 touches and automatically see we got around 1, 2, 3, 4 touches. So now how are we going to determine the support and the resistance point? Now what we can see here is that market went here, came here, it tried to go down, and then it got a push that no, you need to go up from this point. Similarly, after again 4 to 5 days, market gave at the same point and again got a push that no, you need to go up. See, right? So what is that push? What is actually, when I'm walking, what is actually stopping me from going into the ground? That is support, right? So what we told, that when the market is coming down and getting a push that no, you cannot go any further, that point will be known as a support point. Correct? Yes, understood. Now similarly, when market is being told that no, you need to go up, it is going up to a certain point. It is going up to a point from which market is being told that no, you need to go down now. So that point is these points. So market is being told no, that you cannot go further up. This being told is like just using a metaphor. Is being told means the pressure is like that, the market is sentiment is like that price has become a resistance point. See, one resistance, first resistance, second resistance, first support, second support. Got it? Now, why is actually support and resistance important here? We will get to know that right now. We need to pay ultimate attention here. So first what we did, we drew a trend line. Our first criteria was to get two touches from, mainly from, if it's done from wicks, two touches from wicks, that it will be good. Body is okay, but mainly if we try to connect wicks, that is really good, that is a good trend line. And if you are getting more than 4 to 5 touches, the trend line is in a very good technical place. Now what is the importance of trend line? If we see first instance, here the market was trying to like go down further below, it was stopped, like no, this is your support point, you need to go up, you cannot go further down below. Similar case was here. Now when market broke these levels, see, when market was able to properly break these levels, it went further below. That is, for example, when I am walking, I am not able to go into the ground, but if I am using a drill, I am able to drill through. That is, if I am being able to push significant pressure in the ground, I am able to go through. So when I am able to drill, I am going to, like, when I am drilling, I will not like just go little bit and stop, right? I will go the full length of the drill. So that is the pressure. Technically, similarly, well, there was a drilling pressure here or a super selling pressure, which did not like stop a little bit, it went down and down and down, and then it created its own support, like another support point below, right? Because there was a lot of selling pressure, it broke a good support level, which is this part, and it went down and down and down. So what did we learn from this is that if a support level which has at least 2 to 3 touches is broken, then we are assured, we get a little bit of assurance that yes, now is the time to short, now is the time to that, now the market is going to fall. This candle is an assurance candle that the market was going to fall. Okay, now if we see the upper part of this, if we see this 84, that the range that is here, that the trend line, what happens if the resistance is broken? Why is resistance so important, similar to support? Now we are seeing that this is the first touch, this is the second touch, this was the third touch, and after that market opened and closed above that. So similar to this point, market got an external pressure, market got a good force to break this resistance level, and as my example earlier, market got the license to fly off and break the roof and go above. So that was an assurance that market is going to go up. That is, this candle is an assurance candle that the sentiment of the market is going to be bullish from now on. Okay, sentiment of the market was going to be bullish from now on. Okay, this was actually all. Now little extra, if we go see one thing, when the market broke these levels, broke this support level, it went down, and then took a turn that this was the next support level, automatic support level it created. Now if this support level was broken, that was an important level. No, just do not consider this that this is support, this is resistance, this is support. No, we need to consider that whatever is the resistance level, whatever is the support level, that price is actually important. Why is that important? Because when first market broke this level, then it came back, and then you can see big top higher price rejections here. See higher price rejections here. That means that a support zone will automatically, if it's broken, it will automatically, support zone, if it's broken, will automatically become a resistance zone when the market comes back. Correct? Support zone, when it's broken, will automatically become a resistance zone when the market comes back. So keep that in mind and try to make your own support zones, own resistance zones, and how to draw a trend line we'll be teaching in the next class.
Hi everybody, welcome to a brand new class, and in this class we'll be studying two concepts. Not in this class we'll be studying one concept, and the second class we'll be studying another concept, right? I hope you have understood what is breakout, what is reversal, what is retest from Arjun sir. Now we'll be going to an advanced level of breakout and retest. You have heard there's something called as false breakout, right? False breakout and every aspects of the breakout. Now there is something called as bull trap and bear trap. What is bull trap and bear trap is basically, this is an extension of false breakout. Why I am saying that? Let me use the black screen, then it will be easy to make you understand. For example, let's say this was a, sorry, let's say this was a resistance level, right? This was a resistance level, and market was going like this, going like this, going like this, going like this, and market went up and again it came back, right? So what it means, this is basically this breakout, this was a breakout, no doubt this was a breakout, but this is a false breakout, right? So what happens is, for example, if you, let's say you have taken the trade, right? You took this trade, the long position trade, right? So there was a resistance and market went up and break this level. So what you have to do is you have to go for long trade, right? But again market moved down. So what you have to do here, 99% people will book their loss and exit from the market. But as you will not do that. You will book your loss. If this is a false breakout, you will book your loss, and there is some extension. What is an extension? The extension means that if the breakout fails, market was moving like this and the breakout fails, it means all the bulls, you also have taken the long trade, right? On the basis of the breakout, you have also taken the long trade, right? So you are also bull. So all the bulls here are trapped. So all the bulls here is trapped, right? So this is called as bull trap. Very simple concept. When the bulls are trapped, that is the point, it is called as bull trap. Now how to use that? If the breakout fails, every 99% people will book their losses. You will also book your losses, but one thing you need to remember, if market came down, if this is a resistance and this was a bull trap, right? Okay, this was a bull trap. What happens is, after a bull trap, all the people, every participants in the market, they book their losses in a hurry. They panic, they create panic. So what happens is, next time market falls drastically, right? Bulls are trapped now. So what they do, they create panic, right? They create panic. So due to the panic, market falls drastically with a speed. So what you have to do is, if you see that you are already trapped, first of all, you have taken the trade, long position trade, and the breakout fails, you are trapped. So book your loss, no problem, book your loss. Second, if you see market is again coming down from this level, market is again coming down from this level, from this level, from this level, from this level, it means now bulls are trapped. It is called as bull trap. Now you know market can fall drastically with a speed momentum. That is called as bull trap. It's very easy. People, what happens is, when people book their losses, they feel like depressed, they feel like anything, like this is not for me, something like that. Trading is gambling. No bro, that is not gambling. You need to understand the concept, you need to understand how to interpret the market, bro, right? You are trapped, I know that, okay, I'm sorry for that, but still you have an opportunity. That is called as bull trap, because now the bulls are trapped, they will create panic, and that's the point you should make money. So that is called as bull trap. I hope it's very, very clear now. Let's go to live example, and we will try to figure it out, some live examples as well. We are using TradingView without a subscription. We have personal subscription, but now we are using without subscription, because we need to because we think that as a beginner you don't need that much of investment, because if you want to buy the TradingView premium, you have to invest a lot of money. Don't need to do that. First start your journey, gradually you can do this, but initially you don't need that. Okay, let's find out some bull trap. Okay, let's say we have got a very crucial example. This was a level, right? This was a level, and on the basis of this breakout, what you will do? On the basis of this breakout, what you will do? You will go for long positions, right? But you see now this was, see it very carefully, look at the screen now. This was a perfect level, right? Market took a resistance here, market took a resistance here, market took a resistance here. Market now finally gives a breakout, but the second day and the third day market could not hold there. So it means all the bulls are trapped here. All the bulls, all the people, those who have made long positions, they are trapped. Clear? They are trapped. Now they will book the profit very fast, because they will create panic. See how market falls. It will fall like anything, drastically fall. So this was a big fall, right? And the movement was like almost 20%. And you understand the 20% target in stock market. So that's how you need to understand, because what you have to do is you have to create a zone. What you have to do is you have to create a zone. Then after a resistance, breakout, false breakout, bulls are trapped, drastic fall. That's all about bull trap, nothing else, right? So what you have to do is now take 5 stock, as I have said already. Take 5 stock, go back 6 months and see how bull trap is working, right? If the falls what are coming after the bull trap is drastic falls or not. Clear? So thank you so much guys for listening, and we'll meet in the next class. Hi everyone, welcome to a brand new class, and in this class we have already covered bull trap. You understand the concept of bull trap. I hope you are doing homework, guys. Please, it's my request, it's my heartiest request, please do your homework, otherwise it will be very difficult for you, because you may think that okay, I understood everything. No, it's not possible to understand everything at a time, right? So please do the homework, right? We have done bull trap. Now we'll be studying bear trap. Now what is bear trap? Bear trap is basically just an opposite concept of the bull trap. What is bull trap? Bull trap means that, just a recap, that when the bulls are trapped, then market will fall drastically, and that is called as bull trap. What is bear trap? When bears are trapped? Simple. Let me, if you want to see the pictures, you can see the pictures, but I don't need the pictures here because I can make you understand on my own. Let's say there was a support. This was a support level, right? This was a support level. This was a very good support level. Clear? And market was feeling like this. Market was feeling like this. Market gives a breakout here. Market gives a breakout here. So what you will do, if this is a very strong support and there is a breakout on the support, if there is a support, if there is a strong support, if there is a strong support and there is a breakout on the support, what you have to do, you have to short the market, right? You have to simply short the market because the support level was really strong and there is a breakout on the support level, so you have to short the market. Clear? It's very clear, right? Now what happens is sometimes it does not work. The breakout does not work. Market again moves like this. Here what happens is, now on the support, breakout from the support, and you have taken the short entry. You are also bears now, right? So those people whoever have taken the short entry, they all are bears now. Now all the bears are trapped. All the people, those who have taken the short entry, 100% people are trapped now, because this is basically a bear trap, right? Bear trap means, simple meaning, from the breakout, when the bears are trapped, you are bears now. Let's imagine that you have taken the short entry, and so you are the bears, and if the breakout does not work, as a bear, now you are trapped. Literally you are trapped. So that is called as bear trap. I hope it's very, very clear. What happens is, people will create again panic and they will book their losses. Market went shoot up to like this. Market usually do that. So you are not a common people. You are studying this course, you are doing this course with a 120% seriousness. So please don't compare yourself with others, right? Now what you have to do is, because you know the applications, I'm trying to teach you the applications, some different psychologies. These are some different psychology. People don't know that. They usually, what happens is, if there is a false breakup, people book their losses and get out from the market. But that is not the point, bro. You are here for the long run, right? So you have to calm your mind. Okay, my breakout was false. That's fine. I accept the loss. That's no problem. As a trader, I have to accept the loss. Trading is a business, right? And as a businessman, you have to take the loss. There is no point. Okay, so I have taken the loss. Now what to do? Just wait for some time. Let's look out that if this is a breakout, this is a bear trap or not. If you see, yes, this is a bear trap, how you will understand? Market is going like this. Again market is approaching the support level. And market is breaking the support level, market is breaking the support level, then it will be called as resistance. Whatever, market is breaking the price level. Market went down and again market breaking the price level. You don't have to remember support, resistance, something like that. Don't have to remember that. Market ultimately breaking the support level, I mean the price level. If the market is breaking the price level, this is a clear cut bear trap. So it means bears are already trapped. Now market will go up, so you can go for long. That's how you have to manage your trade. Don't be emotional. If you are emotional, you have to practice on yourself to reduce your emotional coefficient. You have to reduce your emotional whatever emotions you have to reduce it, right? Because as a trader, you have to be emotionless. Mark my word, you have to be emotionless, otherwise it will be very difficult for trading, right? So this is bear trap. Now we'll go to the live market and we'll see some live examples as well. Okay, we got a very good let's say this was a support level, right? This was a support level. So this was a very strong support level. Market went down, again it goes up. Now what happens is, here, see it very carefully. In the second candle, in this candle, market broke the level, right? Market broke the level, but it could not sustain here, which means at this place excuse me, at this level, at this price level, or at this support level, all the bears are trapped. So if you have taken the short entry here on the basis of this breakout, if you have taken the short entry, so you are trapped now, you are facing losses, book your losses. And let's see, market is again approaching the price level or not. Yes, market is again approaching the price level. Can you see? Market is again approaching the price level, and it breaks the price level. The moment it breaks the price level, it's clear that this is a clear bear trap. Now bears are trapped, bull will shoot up the market, and market will go like hell, man. See, market moves again, pull back again, boom. So that's all. There is very simple understanding. Just we are teaching you this concept just because that if you are facing false breakout, because when you will start your trading journey, you will understand that breakout is a really big problem, right? So when you are facing false breakout, how to interpret the false breakout, right? How to control your emotions, because you know, sir, that if there is a false breakout, it can be bull trap, it can be bear trap. So I have one more opportunity. And when you have this knowledge that okay, I have one more opportunity, this is not the end, automatically your emotional part will be calmed.